Well, it's official. By a vote of 215 to 211, the three crypto bills have passed the procedural hurdles to finally get signed into law. We're going to break down exactly what is in these three different legislative texts so you know what your congressmen and women are doing for you, other than, as I always say, enriching themselves. Let's actually talk about what these bills do and practically what they mean. This, keep in mind, is very different from the rescissions package. You might hear these fancy talks about $9 billion of rescissions packages. These are sitting with the Senate and House. The Senate just passed the $9 billion last night, with J.D. Vance being the tiebreaker vote, McConnell and Murkowski voting against the rescissions package. There were cuts in this rescissions package to basically save $9 billion of expenses, which is really a drop in the bucket compared to the trillions of dollars that we just are increasing our debt by via the Big Beautiful Bill, about $3.2 trillion over the next 10 years. But hey, at least it accomplishes some other priorities, such as potentially defunding the Corporation for Public Broadcasting, which would limit funding for NPR and PBS from the federal government. A big proponent of right-wingers and as well as the Trump administration. That rescission package is separate from these three crypto bills. So I just want to keep that clear. Even though there's talk about these at the same time, it feels like they're related. They're totally separate. Now, we have three individual legislative texts for Crypto Week. The first is the Genius Act. The second is the Clarity Act. And the third is the Anti-CBDC Surveillance Act. Let's go through them one by one. The Genius Act. The Genius Act basically tries to prevent a Terra Luna style collapse, which wiped out over $45 billion instantly. Well, instantly, it was like within a week, as their algorithmic stablecoin collapsed. That's because stablecoins really haven't been regulated. There hasn't been any regulation for, hey, who says that Tether actually has the treasury reserves they say they do? Because remember, a lot of these stablecoins, they say, hey, you should use USDC, like a Circle stablecoin, or you should use UST Tether, or you should use Terra Luna or whatever to collect a yield. And don't worry, this is all backed by underlying assets. Trust us, bro. The problem with this is there hasn't been a standard for transparency and audits. Even Binance's CZ has been quite dodgy in the past about auditing the actual proof of reserves for stablecoins or the underlying broker-dealer functions at Binance. Now, so far, we've seen FTX and Terra Luna collapse, and maybe because they collapsed, they took a lot of froth out of the market that ended up saving other companies that didn't collapse, though, obviously we've seen Voyager or, BlockFi. A lot of companies, went down during the last oopsie-doopsies in crypto. But the point of this is to say that if somebody's going to say we have a stable coin, the law mandates full reserves, transparency around those full reserves, audits for those full reserves, and mandates both federal and state oversight. That's a big deal because you have not only potentially the SEC or federal regulators watching, but you also have state regulators such as in California, the DFPI, who can then regulate stablecoin transactions in the state, but they're private stablecoins. So stablecoins that could be put together between partnerships such as Walmart and Amazon, or JP Morgan's stablecoin project that they're working on with Coinbase, or the Visa and MasterCard stablecoin projects. Ultimately, there probably won't just be 2 to 3 major stablecoin providers in the future. We'll probably have hundreds of different stablecoin providers. And I personally think stablecoins in the longer term will be a very audited, fully reserved, transparent commodity. And the Genius Act does that. It helps provide rails for this. Now, that doesn't mean that you can't make money speculating on, for example, Circle in the meantime. Circle is really, really excited that this stablecoin legislation is passing. Now, keep in mind, when Circle IPO'd, we pitched on the channel and in our alpha reports that this is going to have major momentum, just like the CoreWeave IPO. And it did. It went from $64 to $300. Since then, the momentum has relaxed, and even though we're getting momentum now, in my opinion, the euphoric rally that we had up here is unlikely to repeat itself, and it's probable that we're going to see a lot of this sort of circle valuation bleed out over time. Point one, because volumes are declining in the security. Point two, because the sex appeal of the momentum and these all-time highs from IPO are fading. Yes, we're seeing excitement today, which is great. I think it'll probably unlock some profit taking though. Now, keep in mind, I give pointers like this and I give these projections. Obviously, it can't guarantee, but I do this every day in the course member live streams and in our alpha report, such as over the last few weeks, I've been promoting Opendoor, which has turned into a massive rocket ship. Now, both of these companies, I think, will fall in the longer term, mostly because I think stable coins will become a commodity and limit some of the profitability of a company like Circle. That'll take about 2 years. And Opendoor regularly does this thing where it goes from like $1 to $2 just on momentum because it's a $600 million company. It doesn't take a lot of volume to move it, so it tends to be an easy trade. And this morning before the market opened, I suggested today might be yet another one of those days. And sure enough, look, we're up 34% on the day. A substantial portion of that after we talked about it. So if you want to be part of that, make sure you go to meetkevin.com, join the alpha report. You pay once, you get lifetime access. So if in 5 years there's another Opendoor I got to talk about, or we just talk about Opendoor again, you want to be a part of that, join it over at meetkevin.com. So that's the Genius Act. This, in my opinion, is a good thing because it broadens commercial access for not just banks, but also private issuers for stable coins. This is, by the way, in contrast with a CBDC. Now, it's unclear if people hate CBDCs because they hate the government and they hate the Federal Reserve, or if there are so many private interests that have kind of lobbied and manipulated us to go CBDC bad, because frankly, there's a lot of money to be made in private stablecoins. Either way, the vast majority of people hate the idea of a central-backed digital currency. Now, why? Because people think that the federal government, which frankly they probably would surveil all of our stablecoin transactions backed by some form of a stablecoin dollar. The only real upside you could think of when you think of a CBDC or central bank digital currency, the only real upside you could see here is that the actual stablecoin could potentially be backed by the full faith and credit of the United States for whatever that's worth. Whereas a private stablecoin says, hey, our representation of this token is backed in reserve somewhere by the dollar or a US Treasury note, which is backed by the full faith and credit of the United States. So you're kind of like one party removed, and that's how Terra Luna collapsed, right? Because you have counterparty risk. Like, it's not just the risk of the government, it's the risk of the counterparty, the entity putting together that stablecoin, which in the case of Terra Luna collapsed. But again, that's what the Genius legislation is trying to solve by saying, don't worry, we'll just audit all the reserves and give you a thumbs up. And then private companies can keep making a lot of money. Now, you have to understand this. The crypto lobby is huge. In fact, there's a PAC called the Fair Shake Political Action Committee. They are a crypto PAC. And they conveniently this week, I think it was yesterday, announced, hey, just saying, just gonna put this out into the universe. We have $141 million war chest, and we will use that to promote politicians we like. That's basically a way of saying, listen, jackasses, you need to vote for our crypto legislation or we will defund the crap or run against you candidates who support us in the 2026 election, and we will primary your ass unless you do exactly what we want. It's just the translation. So this crypto PAC is really powerful. And wow, what a surprise. Who funds the Fair Shake PAC? Well, in the $52 million that Fair Shake raised in the last 6 months, Coinbase contributed almost half of it. But wait a minute, Why would Coinbase contribute so much money to the Fair Shake PAC, which is promoting so much the stablecoin regulation? Oh, because remember what I said earlier, Coinbase is partnering with JP Morgan to launch their own private stablecoin so they could try to make some money like Circle's making money. See how it all connects? The dots just line up. It's perfect. Everybody makes money is the idea, because it's always about money. Now, the Clarity Act is also very useful. This is a little bit more detailed, but it's really important to understand the difference between Bitcoin, Ethereum, and if you own rental property and haven't yet started using Turbo Tenant, you might be leaving some money on the table and adding way too much stress to your life. Between chasing rent, screening tenants, and managing leases, it's a mess if you don't have the right tools. And that's why Turbo Tenant is so excited to partner with us with an all-in-one platform that lets you self-manage your rentals without a property manager. You can advertise your unit on Redfin, apartments.com, and more seamlessly. You can collect and screen tenant applications with full credit, background, and eviction reports. You can send custom leases, get them signed digitally. You can automate rent collection with even reminders, receipts, late fees built right in, and even track income and expenses. So come tax season, it's just not buried in spreadsheets anymore. And yes, it even helps you track your income and expenses for tax time. No more clunky spreadsheets. It's free to start, and the premium plan is only $149 per year for unlimited properties. Most platforms charge per door and still don't offer half the features, so it's no wonder why 750,000 landlords trust Turbo Tenant. And the best part is you can try it for free as long as you want until you decide you want to upgrade to the premium plan, which only runs $149 a year for unlimited leases and properties. So if you want full control, more cash flow, and less headache, this is a no-brainer. The Clarity Act finally determines which regulatory body and what framework is responsible for the regulation of Bitcoin, Ethereum, tokens, real-world assets, everything related to cryptocurrency. Here's how it works. The Clarity Act says Bitcoin and Ethereum are products that are intrinsically linked to blockchain systems whose value is derived from those systems, such as through governance, transaction fees, or access to services. And therefore, Bitcoin and Ethereum are digital commodities and shall be regulated by the Commodity Futures Trading Commission. They have way fewer regulations than the SEC. You would much rather have the CFTC up your butt than the SEC up your butt, okay? SEC, very powerful. CFTC, a little more chill. At least that's the way people describe them in a simple manner. So that means Bitcoin, Ethereum, CFTC. Cool. What does the SEC get? The SEC basically gets everything else. So any kind of investment contracts, tokenizations, stable coins, securities, deposits, option contracts, pooled investment vehicles, NFTs, tokenized real-world assets, all of this, SEC. Now, the cool thing about the Clarity Act as well, though, is they're borrowing from what we could do in the stock market today, but nobody does. Technically, let's say you own a share of Tesla, okay? So we'll take out a little notepad here, and we're gonna write that this notepad represents, shares of Tesla stock, okay? So here, we have shares of Tesla stock. Technically, if I hold these shares of Tesla stock myself, which nobody ever really does because you hold them, on an electronic record basically at your broker-dealer, in book entry form, right? Like you don't actually hold the shares anymore like we used to back in the day, like 50 years ago or whatever, where you actually hold the share certificates. If you held the share certificates for Tesla, technically, like you go, hey, yo, neighbor, you want to buy some of these? Yeah, sure, I'll buy some of your Tesla shares. Cool, man. Here's some money. Here are the shares. Technically, that would be considered an exempt transaction. So the security itself is covered by the SEC, but that transaction isn't. Like you could trade that as much as you want in person. But as soon as you go on the internet and you try to trade Tesla on like Robinhood, Well, that's regulated by the SEC. They surveil what you do. They surveil the trades. They want to make sure the money clears. They want to make sure the transaction clears. They want to make sure everything's balanced. They want to make sure there's no fraud. They want to make sure there's no insider trading. All of that is called surveillance, making sure you have functioning and honest markets, right? No fraud in markets. We don't know what's happening when people are just moving share certificates around. That's why most of it is electronic now, and it can be surveilled by the SEC. Okay, the reason I bring all of that up is because now a token, once issued as a security, just like Tesla shares are a security, a token issued under an investment contract initially goes through registration with the SEC. So an ICO, like an initial coin offering or some kind of initial tokenization, like let's say HouseHack is like, hey, we're going to tokenize these 20 properties and we're going to sell these tokens. That initial sale is a securities transaction. However, once you have the token, even though it's electronic and being done online, you are allowed to trade that token with another party without being subject to a securities transaction regulation. That's pretty big. This is pretty good. This is great because it gives people a lot of flexibility and it's very crypto positive, which again explains why we're seeing such an explosion right now in, well, not only Ethereum. I mean, you could see Ethereum just over the last, few hours here has just been exploding. We're almost at 3,300. Bitcoin's almost running back to 120, which is great. We know Circle is doing fantastic, and people are taking money out of the SPAC that Eric or Don Jr. probably got paid some nice dollar hollas for to be on the board of. But anyway, Don Jr. IPO'd this morning with the SPAC company that was involved in this, and we see some liquidity issues here, negative 19%. But the point is, crypto's doing fantastically as a result of these bills passing, or at least advancing their procedural hurdles. So this gives you a little bit of color on these three different things. Now, some other notes to think about. We've got a lot of talk about this anti-CBDC Surveillance Act actually just straight up banning the Federal Reserve from ever being able to get into a central bank digital currency. So that basically kills that. You also get the right to self-custody your assets if you want, which is also fantastic. And you finally get some clearer regulation so that you can actually have legitimate offerings in crypto. Not saying that there aren't other legitimate offerings, but the problem that you've had in the past is you kind of don't know who's doing the offering. So when people rug pull a crypto, they just disappear. But now the SEC would actually require in these registrations, presumably, transparency into who the actual underlying owners are and the vested interests are, what their conflicts of interests are, and transparently show who these people are. So if they rug pull you, you know who to sue. So all of this also gives us some rug pull protection for new initiatives, which is also good. Really, regulation is usually designed not to tell you that something is a good investment. It's just to tell you that it's not a fraudulent investment. That's the point of regulation. Like, I always like to use HouseHack as an example. Like, I personally think HouseHack's going to do really, really well, and the stock value is going to skyrocket, whether it's through our, portfolio expansion, our refinances of our deals, the wedge deals we do, or through the AI project that we have that we're going to be licensing soon, which is really exciting. We'll talk more about that later. I think that, but we don't know that. So an investment can go up or down in value. The SEC's job is not to say, oh yeah, we think Kevin's AI is going to go to the moon. It's to look and say, okay, like, are you guys actually getting PCAOB audited? Cool. Okay, yeah, you got your PCAOB audit. Looks good. Great. That's their job, right? It's like, what do PCAOB auditors do? Well, make sure you're not a fraud. Make sure your conflicts of interest are disclosed. That's the point. So it's not to make something, the regulation isn't to make something a good investment. It's to make it a fair and transparent investment. And that's what's happening with these bills, which is great. Crypto's really needed it for a very long time. And so I'm really happy and excited to hear this finally come together. So mind you also that folks like Marjorie Taylor Greene, they were like super anti this for a while. Chip Roy, Keith Shelf, all of them were like, oh yeah, no, we're not going to vote for this. They flip-flopped probably in part because Trump called them yesterday and kind of demanded that they, flip-flop. And so sure enough, they did. And AirPod stopped working, but that's okay. And sure enough, they did. But this happens every time in Congress. You always have a few holdouts that are like, oh no, this isn't going to pass because there are a few holdouts, and then it's kind of like the president's job. Hey, what's it going to take? You want to come to dinner with me? You want to come see some of these photos that I have from certain files that aren't to be released? Why don't you come over and I'll show you some photos? And then all of a sudden the votes flip, I mean, I don't know what was offered, but that's how it works. That's called politics. That's the game. Anyway, there you have it.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.